The SEC has approved 3 Bitcoin futures ETFs this year, but has thrown cold water on the notion of a pure play Bitcoin ETF, most recently rejecting VanEck's proposal for a spot Bitcoin ETF 2 weeks ago. Let's bring in Dave Abner into the conversation. He's still with us. Despite all the naysayers, the SEC's latest move, he believes that the crypto community will get what it wants, and that is a pure play Bitcoin ETF. He believes it's imminent. Dave, you head up business development at Gemini crypto exchange. Why are Bitcoin future ETFs the answer to SEC's crypto conundrum?
Great question, Leslie. Thanks for having me on today. The SEC is moving very meticulously in the Bitcoin and the crypto ETF space. They've thought about this. They've worked very hard. They've obviously been paying attention and reading a tremendous amount of work that's been produced on the subject. The futures funds are interesting. The futures strategies funds were a great step forward for the SEC, if you think about it, right? And why would they do that? So the CFTC oversees the Bitcoin futures. The SEC oversees 40 Act funds. So the approval of a futures-based fund that fits within the 40 Act is a perfect next step for the SEC. What they're saying is this is no longer actually about market maturity. I think the SEC would like to have more oversight and clearer regulations over the entire crypto market. They're not there yet, but I think that's coming. And so I think they've really sort of been paying attention to the market. They are taking steps because they acknowledge that the future strategies funds, they show investors that crypto is an investable asset class. And so the SEC is taking these progressive steps to move us forward. I thought we were going to be there by the end of this year. I actually thought the VanEck physical fund would get approved. I'm still very bullish. I think the SEC knows exactly what they're doing, and I think we're on that way, on that path.
Hey, Dave, it's Tom. Just really quick, with Cameron and Tyler Winklevoss being your founders and having the first application for an ETF way back in 2013, I'm sure you're encouraged to see the futures-based ETF, especially with the record amount of money that came in, over $1 billion just in a matter of days. What's it going to take? Because there's surely demand from individual investors and especially financial advisors. What's it going to take for us to get a physically backed ETF?
Well, like I said, look, I think the SEC is just moving on a path. I think they are continuing to develop the ecosystem as well. So you're right. Tyler and Cameron filed for the first Bitcoin ETF in, I think it was 2013. The market, Gemini didn't even exist at the time. So the market for regulated custodians was not developed. They've now since developed robust custodians. The market for trading has really evolved. And, like I was saying, I think the SEC allowing the futures ETFs is them signaling the markets. We think this is an investable asset class. We think the market has matured to a level that we, with all of our investor protections, are comfortable with them achieving access. And I think they are just sort of waiting to take that next step. They're potentially looking for some greater, clearer regulatory guidelines around the industry. And maybe we see that in Q1, and then we see an ETF right after it. I think there's a little bit of movement in that direction, I think.
Tom, do you agree with that? Do you think that the SEC is moving toward a spot Bitcoin ETF approval process? Is there a risk that they don't?
Yeah, I wish I was as optimistic. I think some of the hunger has been satisfied with this the future strategy for sure, but there is concern about the pure volume and availability of Bitcoin futures. But it's one of those things that we're not going back. Cryptocurrency is here to stay, and individual investors and advisors have huge demand. We do a survey every year among the advisor community, and it just gets going more and more. And for the average advisor out there that is managing a diversified portfolio for their clients, not being able to buy Bitcoin or a spot Bitcoin ETF on a brokerage platform is somewhat of a handcuffing nature there. So if your clients go rogue and they go off and open up a Coinbase account, they potentially could shoot themselves in the foot as far as the volatility and that type of thing. So I think this is something the advisor community is pushing for. I think we'll eventually see it. I wish it was going to be Q1, but I would say fingers crossed by the end of 22.
Just out of curiosity to follow up on that, Tom, what does that mean from a short selling standpoint as well? Obviously, institutional investors tend to use ETFs as a way to hedge or to show, a directional bearishness toward a sector or theme. Do you think that an approval of a Bitcoin spot ETF would further allow institutional investors to short the price of Bitcoin?
Well, it's just another form of liquidity, and shorting the market is a great opportunity to provide greater liquidity. And the market as a whole has held up very, very well. We haven't seen any chinks in the armor on the futures side. And would it help to add to liquidity if we saw some spot ETFs? I think so. And although we've had a little bit of a pullback recently, there are a lot of people feeling that come 22, we might see Bitcoin up to $100,000. If that were to happen, you can imagine the glowing demand. I tell you, I'm a baby boomer. I'm a baby boomer. But all my friends I talk to now just finally are asking me about cryptocurrency. And I'm just scratching my head because it's not as though they're late. They're going to continue to maybe dip their toe in the water, but they like to do it on their brokerage account as opposed to going to a Coinbase account or something like that.
I don't know exactly.
Oh, go ahead.
Sorry, Leslie. I don't know about exactly the way you phrase it, Tom, but I would go back to that piece with investors being able to short the market as well. Look, I think it's really important to remember what ETFs have done over the last 20 years, right? They are a centralized liquidity place for all types of investors. So they bring together long-term holders, traders, hedge fund managers that need to short the market for their strategies potentially. They add liquidity in general. So whether it's a Bitcoin futures ETF or a Bitcoin physical ETF, both of them will continue to help the ecosystem grow. And with the strategy, the Bitcoin futures strategy ETFs, some advisors will be able to use those funds, and that will bring them into the market. It will help them answer client demand. So all of these things are good. And even on the short side, Leslie, generally ETFs enable two-way markets. They increase liquidity and they help investors. So it's all a good thing in that sense.
Yeah.
That's
and Leslie, if I can add one more thing, the great thing is you have companies like Gemini, but there's so many other very high-profile companies that are pushing for the same thing. They want to spot Bitcoin ETF. And the cool thing is they're working together. They're sharing information. They're working closely with the SEC, meeting regularly. And it's very, very healthy because we've got this ecosystem that's building where, although there's healthy competition, they're all kind of doing it together. And it's quite admirable.
Yeah, it's not seen as a zero sum, especially not in the ETF world. At least that's my take.